Utility stocks have really fallen out of favor lately, in part because these are high-yielding bond market alternative stocks that become less attractive when interest rates are poised to go higher. And in part because they're steady-eddy businesses that look less compelling when the economy is expanding and the cyclicals can put up truly terrific growth year over year. But that doesn't mean you should just wipe your hands of the group. Consider the case of American Electric Power, AEP, a company that owns the largest power transmission network in the country, along with a major power generation portfolio serving more than 5 million customers. This stock got slammed in the wake of the election, and while it's recovered since then, I think it's not getting enough credit for being a potential Trump stock. That's because American Electric Power burns tons and tons of coal, and we know the Trump administration plans to ease up on environmental regulations, particularly when it comes to fossil fuels. That's one reason we continue to own the stock for my charitable trust. You can follow along with what we say about it at actionalertsplus.com. Plus, AEP just reported this morning, delivering better than expected earnings, slightly weaker than expected revenues, but the guidance for 2017 was pretty strong, and that's what matters. The stock's got a 3.77% yield. I like that. So can this name thrive in an environment where the utilities have gone out of style in the Wall Street fashion show? Are we underestimating how much they can benefit from the president's agenda? Let's take a closer look with Nick Akins. He's the chairman and CEO of American Electric Power. Get a better sense of the quarter where it's headed. Mr. Akins, welcome back to Mad Money.
Thanks, Jim. Great to be with you again.
All right, Nick, right near the top of your conference call, you say this has been a year of repositioning and de-risking the company to provide a firm foundation for financial stability, earnings, and dividend growth, as well as a refocus on our customer. Does this mean that we should expect this incredible dividend-producing machine that is American Electric Power to be even able to generate even higher dividends?
I really believe that's the case because we're obviously restating earnings. We really talked about a growth rate. We've transitioned the company to a 4 to 6% growth rate to a 5 to 7% growth rate. And we've always said, you know, with our board support, that we move the dividends commensurate with our earnings growth. So a higher earnings growth yield, and certainly we're off to the races.
Oh, boy, that's terrific. And also, given the areas that you're in, we see recovery in some of the companies that I deal with and the banks that I deal with in that area. You seeing it for the last 4 months, a little bit better tone?
Yeah, so over the year, it's been really flat, but the last quarter, in the fourth quarter, we started to see improvement from an oil and gas perspective in our territory, from an automobile manufacturing standpoint, and a construction and healthcare perspective. So we're seeing growth in our territory. This is the first quarter over the last year that we've seen growth in all the sectors.
Man, that's impressive. Now, in 2011, you released a plan to comply with some EPA regulations. Frankly, EPA regulations took my breath away when they did. I mean, we're all environmentalists, but this was a very aggressive plan by the EPA, and it really would cost your rate base a lot. I want to play a tape today of something that we heard from President Trump in Philadelphia that made me think that maybe the 2011 plan may go to the wayside. Let's hear this tape.
At the same time, we will unleash the full power of American energy, ending the job-killing restrictions on shale, oil, natural gas, and clean, beautiful coal. And we're going to put our coal miners back to work.
Now, Nick, you have plants in coal miner districts.
Right.
You use coal. When I heard what the president said, and I know that he's got Attorney General from Oklahoma Pruitt up for the EPA job, I have to believe that whatever plan had been what you were facing with is going to go away. Do you think I'm being too optimistic?
That may be a little bit optimistic. I think really when you look at what's going on, there's a transformation occurring in our industry, and it's moving toward a cleaner energy environment. So when President Trump talks about clean coal, there really needs to be a focus on the ability to remove carbon as much as possible from the coal itself. And also, with natural gas becoming prevalent as well, that balanced energy portfolio should be a true benefit, not only in mitigation of cost to our consumers, but also reinforce the ability of coal to be maintained as a part of the portfolio. That's the key point, because I think most coal units today are fully controlled from a sulfur dioxide, nitrous oxide, and mercury standpoint. So obviously, the more emphasis placed on removing carbon from coal as well, it certainly will be one of those resources of the future that will be maintained. So I think overall, it's positive for that set of fossil resources to remain a part of the portfolio of the U.S.
But at the same time, I got to ask you, as we talked many, many times, and to your predecessor, we can't lose sight of the fact that coal is not beautiful. I mean, coal has a lot of attributes that we really don't want to burn. versus what we thought we did when Jimmy Carter said that we are the Saudi Arabia of coal. I mean, as a person who I know cares about the environment and who runs a major utility, coal is not beautiful to you, is it?
Well, it's actually a part of our portfolio. It will remain a part of our portfolio. But in today's environment, with natural gas prices being so low, and also renewables continue to have a positive influence in terms of the resource mix. If you look at the resources today for new resources, it's going to be a mix of not only renewables, solar, wind power, energy storage is a technology that's developing, and as well natural gas. Then that's going to be sort of the fuel of choice going forward. But maintenance of existing coal will certainly keep coal miners at work, and the improved utilization of coal will certainly benefit that as well. But we clearly are moving toward a more balanced portfolio across the fleet, and actually that's the best thing to do, as I said earlier, to mitigate prices to consumers in the future.
One last question. The president is trying to get a lot of these big car companies to build more plants here. And I think there's some confusion. A lot of people feel, well, they're all robots, really doesn't help the economy. But I know that when they were closing plants in American Electric Power's area, that hurt your business. I have to believe these big plants have a genuine impact and do create more jobs beyond their plants because of what it's done for what American Electric Power says. Am I right about that?
Oh, absolutely. I mean, when President Trump talks about bringing manufacturing back to the U.S. and, in fact, making it more resilient in terms of expansion from a manufacturing and industrial standpoint, that's AEP's service territory. And we're very much looking forward to the shackles coming off in terms of the ability for these kinds of businesses to grow, because once you get the industrial manufacturing base going again, you've got the following effects of the commercial businesses that support these businesses, and as well the residential side of things. Yeah,
see, I think that there are people who don't understand the multiplier effect, but I know you do from looking at your numbers every single day. That's Nick Akins. He's Chairman, President, CEO of American Electric Power, AP. Always good to see you, sir. Thank you.
Thank you, Jim.
Right, a lot of good things happening, but again, if rates shoot up, people won't want to own it. We're staying long for the charitable trust. We like income, and it sounds like the dividend acceleration is going to happen here. Stick with AP, stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.